What's up, Facebook? Ty Crandall with Credit Suite here. Today we're talking about fundability. We're talking about exactly what it takes to get approved for loans and credit lines. Still working on some technical things here with our Facebook Live, including getting comments, which apparently I have not figured out because I don't see your comments there. But we will get that figured out in due time. So we're just back with our fourth new stream since we've come back live here on Facebook a matter of weeks ago. And you know what that means? If you do follow us, that means that this chalkboard and this chalkboard get completely wiped out this week, and the next week we're going to start the beginning of 4 brand new topics that are all dedicated to helping get credit and financing for your business. So this is what we do here on Facebook, right? At Credit Suite, we help you get capital for your business. We help you do so by improving your fundability. These are the things that make you lendable. This is kind of like the secret formula that lenders and credit issuers have of the criteria you need to meet to get approved. And we also help you build business credit for your EIN that's not linked to your social. So in the weeks to come, we're going to be mapping out those steps to build business credit, talking about the benefits and ways you can get credit without personal liability. And we also talk about how to access financing, most importantly, how to get access to all financing in one place and what it takes to actually get approved for the financing that's out there. But today, we're diving into one of my favorite topics, which is fundability. This is kind of the secret formula that lenders and credit issuers have that you must meet to get approved. Look, you know as well as I do that you've applied for a credit card before. One of two things has happened. You either got an approval or you got that dreaded message that you'll hear by mail in 7 to 10 days, which almost always results in a decline. So what happens in that process is this. These credit issuers have a set criteria of what they're looking for that you must meet to get approved. If you meet it, you get that automated approval. If you don't meet it, they push it for manual underwriting, and 99.9% of the time, that results in a denial, as you've seen. So the key for you and I is to get your applications approved automatically using the automated system that these lenders and credit issuers have. And the only way we can do that is by decoding fundability. You see, so many people believe that their revenue or their credit score or these other factors are what gets them turned down. But here's what's crazy. More than half the time, it has nothing to do with any of that. More than half of applications are denied because of basic fraud concerns, because of things we're going to talk about today related to your fundability. Even more than half, closer to 3/4 of these applications aren't denied because of credit. They're not denied because of revenue. They're denied because you're just not meeting some of the basic requirements that you must meet to get approved. That is what we call fundability. And the reality is there's over 125 fundability factors. There's over 125 factors that lenders and credit issuers look at to determine if you should or shouldn't be approved for credit and financing when you go to apply. So today we're going to decode some of these things. The goal of today is for you to actually come in and take a look, and let me see if I can pull up my little screen changer here on how to get listed perfectly. Okay, we're talking about how you can meet these lender and credit issuer fundability standards. And we're going to take a look at some of the biggest and most popular standards they're looking at so you can kind of decode this. And basically, I explain it like an open book test. It's like taking an open book test. The dogs are going a little crazy out there. I'm working from the home office today. So it's just like working and doing an open book test where you know the questions, you know the answers before they're even asked. Okay, that becomes extremely important. So today, that's exactly what we're going to be diving into, is how these fundability standards actually work. So let's go back to the chalkboard. So let's talk first of all about business legitimacy, okay? So one of the first things that we're looking for here is lenders want to feel that your business is legit before lending, okay? That means that your online and offline listings need to be exactly the same, okay? If you have no online listings, that means you have a bad reputation. So let's talk a little bit about what this means. I mentioned before that over half of loan applications are denied because of fraud concerns. Here's how they figure that out. They figure it out because of incongruencies, and there's 2 different kinds of incongruencies you should know about. The first is just that your online listings don't match up to the other stuff that you're submitting. So let's say your business name, your address, your phone number is a little off, a digit off on the phone number. The address is changed. The name of your spelling of your business is a little different on the application than what's with the Secretary of State, what's on your bank statements, what's on your Yelp or your Bing or your website. Well, then that creates this incongruency. Believe it or not, the reporting agencies like Dun & Bradstreet look at your website for information, as well as places like Yahoo, Bing, Google. So what happens is if they're picking up information on Google that's different than what's on Bing, that's different than what's on your website, well, first of all, that can create multiple credit profiles for you, especially if the addresses are different. But most importantly, it creates incongruencies. So what happens is when your application data doesn't match this other information, lenders default, their systems think it's fraud, and that's why over more than half of applications get denied. But it's beyond just making sure that your documents are congruent. Your bank statements, like your offline listings, right? Your online listings like Yelp and Bing and Yahoo, that all that stuff is congruent. The second way they do this is through something called the SBFE, the Small Business Financial Exchange. This is a secret data aggregator that most business owners know nothing about. Here's how it works. All major banks are members of this organization and they openly share data with each other. That means if you fill out an application for Bank of America, what you don't know is that when you go to Chase to apply, Chase has the same application data that you submitted to Bank of America. Now, let's say your revenue is a little different. Let's say something on those applications, certain things are not the same. Well, then that throws up red flags in these computer systems. They look at your application, they match it against what you applied before in a different place with SBFE. They see the information's incongruent. The computers throw up red flags with potential fraud concerns, and that gets the application denied. So I've got to tell you, the most common reason that loans get denied is not because you don't qualify. It's because the lender thinks the application's bogus to begin with. It's fraud. And they think it's fraud because of these incongruencies and because of the information online and offline doesn't match what's on the application, and because information you've submitted with another bank isn't the same as the bank you're applying for. So congruency is very important. It's very important that you make sure that these online listings are the same, that this is established, that you have the online listings, that you're with 411, that your Google, your Bing, your website's all the same, your Secretary of State data matches your IRS data, matches your bank statement. It's very important that all that stuff is the exact same. So let's talk about online stuff. You need to make sure you have a professional website and your email address. Your email address should be the same as your website, right? My email is info@creditsuite.com. Our website's creditsuite.com. These two are congruent. That goes a lot to make sure that you look legit, right? This is what we're looking for, is legitimacy. So when it comes to legitimacy, they're looking at that as one of the criteria. Avoid long URLs, numbers in the URLs, things that are complicated for your actual users, for your customers to actually access. Get the .com version of your business. This gives you a ton of credibility. Okay, lenders and credit issuers are going to hold it against you. Yes, believe it or not, if you have a .net or a .org listing, because if you don't even own the .com, well then how legitimate can your business really be? Okay, almost all of the big companies that are out there that are publicly or privately owned all own their name .com. You want to make sure you have that business email address, as I mentioned, not a professional or personal email, no Google, no Yahoo email addresses, no Gmail. You've got to make sure it's something like admin@yourwebsite.com. Like in my case, info@creditsuite.com becomes very important. What they find online is very important. Remember, the reporting agencies are pulling this information from online, okay? They're actually looking at this information. So you've got to make sure that that information is congruent and that it reflects that you're legitimate. You need to make sure that you avoid home phones and cell phone numbers. Get a business phone number, even if it's a voice over IP. Don't know why, but avoid Google voice over IP numbers. For some reason, lenders tend to have a real issue with them. So get a dedicated business phone number. Get a fax number. If a business loan application asks for a fax number, you need to list a fax number. Get a toll-free number and make sure that that phone number is listed with 411. So 411 is one of the best kept secrets I found in the lending industry. And here's how it works. You can't list your own business with 411. 411.com is not 411. So lenders and credit issuers really like 411 because they find that newer, unestablished businesses aren't listed there. And since even if you knew about it because of a live stream like this where someone's teaching you, then you can't go just get yourself listed with 411 typically. Issuers really use this as a criteria for basic legitimacy because you're not legitimate if you're not 411. So how do you get listed with 411? Well, typically you get picked up organically because you're in Yahoo, because you're in Bing, because you're in Google, they naturally pick you up on 411. A hack is to go to list yourself. List yourself as a company that will help you get listed with 411. Now keep in mind, there's a cost for what we pay for our clients is $30 a month. So you're gonna have a cost if you do it the right one and choose the right option with them. We cover that for our clients because it's so important. We find so many people get denied for credit and financing because of this basic requirement to get listed with 411. So make sure you follow these rules we've talked about here with actual online listings with your phone number. Now let's talk a little bit about business addresses as well. You need to have a real physical business address or a virtual address as your last resort. Okay, you need to avoid PO boxes, avoid UPS addresses. You cannot use those. Those will be one of the biggest reasons they get you denied. You can go to creditsuite.com/alliance for our best source for virtual offices. You can also try Regis and DaVinci. We try a lot, hundreds and hundreds of our clients every year get virtual offices. And I'm telling you, Alliance is the best we've seen. You can go to creditsuite.com/alliance to get started. Let's talk about home addresses. Okay, look, some sources just aren't going to approve you if you use a home address as your business address. I know. You can run a very legitimate business from your home. Look, I'm working from my home office today, right? Credit Suite's a pretty big company. So I respect that you can absolutely operate a legitimate business out of your home. But credit issuers and lenders hold it as a big strike against you if you're using your home address. Here's what's even worse. Now Dun & Bradstreet is putting Google Street View shots on your credit report of your business address. That's crazy. So clients call us freaking out because they pull their business credit report and see a picture of their house on the business credit report. So if you don't want those kind of things to happen, then get a physical address or get a virtual address. Just suck it up and pay the bill for a virtual address, because that's going to give you the legitimacy that you're really looking for. And if you move your home location, if you move your business location, that address can always stay the same, so it's a consistent address. But avoid UPS addresses and avoid PO boxes. They're held in a special database that lenders and credit issuers use that tap into. Their computers pull that data out, and for some reason, that is one of the biggest reasons that we see applications get denied, is because these PO boxes and UPS addresses are being used. You're easier to use a home address versus those, but again, I've given you some of the drawbacks about home addresses. Business bank accounts. You got to have a business bank account dedicated strictly to the business. You got to open that account as early as possible. You have a bank credit score most business owners know nothing about, called your bank rating. Part of when you open your account ties into that bank rating. The other thing is, if your business ever gets sold, the open account date of the business is what a lot of lenders will look at of the date your business got established. Let me clarify. Your business is usually established based on your actual entity date. Hopefully I didn't just mute that. Hopefully what happens is that typically the date you set up your entity is the date you establish your business. But people buy these shelf corporations. They try to fool lenders. They try to fool credit issuers into believing that they're actually open longer than they are. So lenders and credit issuers have caught on to this. And when they see an ownership change on the family tree, then what happens is they automatically will default to business bank account open date. So make sure that you set that bank account up as soon as you possibly can, because that open date really matters. Don't commingle funds between personal and business accounts. The reason this matters when it comes to building business credit is because business credit, they're going to ask for a bank reference, okay? And how you manage your bank account matters a lot when it comes to getting financing. Look, I'm not going to cover this on this stream, but if you go to youtube.com/credit suite, you'll find very recent training, I think as recent as last week, where I cover exactly what you need to know about your bank rating, check systems, how you manage your bank account when it comes to lenders. So if you go to creditsuite.com/ or youtube.com/credit suite, then you're going to be able to find our training where we actually go through and teach you how to manage your bank account to have the best chance of getting loans. And I'll do that on another live stream. So that's what you need to know for this matter when it comes to legitimacy in bank accounts. If you need to have a business license, make sure you get the business license. Make sure with the county, with the industry you're in, make sure the address is the same, congruency. Make sure you get set up with the IRS. You need to have an EIN number. You should get a corporation or an LLC. You want to avoid sole proprietors. Sole proprietorship has a 1 in 7 chance of getting audited per the IRS, and a corporation has 1 in 50. Look at that. Which would you rather be? The other problem here with sole proprietors is that you are a business. So the issue with that is that when we build business credit, we want to separate that liability. We want to get away from personal guarantees. You can't do that if you and the business are one and the same. You got to separate them. They have to be separate. Sole proprietors don't do that. You're one and the same. Corporation or LLCs give you that separation that you need to really come in and separate that liability. So it becomes very important. Your business merchant account, okay? You want to be able to accept credit cards, so you need to get this set up. Okay, customers are going to spend more if they can pay for a credit card. You also want to get PayPal and Square set up, one or the other of these, and run as much money as you can through PayPal and or Square. And here's why this is important. It's important because PayPal and Square have some of the easiest loans I've ever seen to get approved with. You get $500 fee many times. They don't charge interest. There's no credit check in a lot of cases. They're just basing the approval based on the money that goes through these accounts. Here's why I love that. Let's say every dime the business collects goes through PayPal. Then PayPal deposits in my bank account. That gives me so many more lending options. Now I've got great lending options with PayPal, and since the money hits my bank account, I have all kinds of normal lending options as well because it's going through my bank account. So when you run money through PayPal and Square, it just opens up another funding option for you to get money for your business. And it gives your customers an easier and better way to pay. A lot of times customers would rather pay through PayPal or Square. So get a PayPal or Square set up. Set up a merchant account as well and have that money all funnel into your bank account because that opens up a bunch of lending options. The fact that you have a merchant account opens up merchant and cash advances. The fact that the money's going through your bank account opens up revenue lending loans, term loans, SBA loans, and more. The fact that you have a PayPal or Square account opens up PayPal loans, Square accounts, or Square loans. So there's so many options when you do that combination. So again, the combination is get a merchant account, get it with PayPal, get it with Square. That's going to give you the most options. You also want to make sure that you start your business credit reporting. So you want to go into Dun & Bradstreet. You can go to creditsuite.com/Duns. You don't even need these dashes there. When you do that, you can set up your Duns number with Dun & Bradstreet for free. And when you have 3 accounts reporting to Dun & Bradstreet, that will give you a PAYDEX score. Now, here's what you need to know about this, is that when you go to Dun & Bradstreet, I'm going to hit this mute button. Just wanted to see what that looks like when it's muted. So when you go to Dun & Bradstreet, here's what you need to know. creditsuite.com/Duns, D-U-N-S, gives you a quick link to get your Duns number for free. I said for free. The reason that's important is that if you talk to Dun & Bradstreet, if they call you or email you and want to get you on the phone, don't talk to them unless you want to get sold. I promise you, Dun & Bradstreet's never going to call you for any other reason than to sell you something. So if you don't want to be sold and they're good salespeople, don't answer the phone. They're going to try to sell you credit monitoring you don't need. They're going to try to sell you a credit builder you don't need. They're going to try to tell you you need all the stuff to get your Duns number. None of it's true, okay? Matter of fact, if you do any research, you'll see Dun & Bradstreet Credibility, the company that sells this, has, I don't know, I think 2 to 3 class action lawsuits every year started against them because of these unethical practices. You don't need to pay for your Duns number. It's free, okay? But if you get them on the phone, they're going to try to convince you all kinds of other things. So get a Duns number and get 3 accounts reporting to be able to make sure that you build your credit profile with Dun & Bradstreet. Now, you also need to get payment experiences with Experian and Equifax. You need to go to creditsuite.com/reports to see if you have anything reported with them now. You'll be issued a failing credit score with Experian and Equifax even if you have no credit. So you need to see if you have a profile, if they even know you exist. It's a really big deal. You can do that at creditsuite.com/reports. If you find that they do have a record, pull your credit report by creditsuite.com/monitoring. And then what that's going to help you do is then you're going to be able to check that for accuracy and dispute any accounts that actually are on there that are not accurate. So here's what you need to know as we go through this. creditsuite.com/reports. Free search with Dun & Bradstreet, Equifax, and Experian to see if they even know you exist. If they know you exist, you want to get monitoring. Experian's $50 a month. DMB's $150 a month, $200 a month. If you go to creditsuite.com/monitoring, it's $24 a month. I'm saving you 90% through our nav integration. That will get you access to your reports. You can see what's inaccurate, and you can dispute any information that's actually on those reports to make sure that gives you the best chance of getting approved. Think about this. Do you think you're going to get a home loan? You think you're going to get a car loan? Do you think you're going to get a personal credit card without your personal credit being pulled? Of course not, right? Same thing in the business world. You're not going to get business loans, credit lines, and credit cards without your business credit reports being looked at. The difference is, in the consumer world, there's a law called the Fair Credit Reporting Act, which mandates, it requires that credit issuers notify you if your credit's been pulled and you get denied. There's no such law in the business world. So they're pulling your business credit reports and making all kinds of lending decisions about you, and you don't even know it's happening. So go to creditsuite.com/reports, see if there's anything that creditsuite.com/monitoring. That way you can see what's actually on those reports. So also feel free to go to creditsuite.com/EIN. Okay, creditsuite.com/EIN. That's our building business credit. That's going to give you everything you need to know to build your business credit, including several more fundability than we even had a chance to talk about now. And something I should probably put, I don't know, on some chalkboard is a way to get in touch with us. Okay, you can see I'm too busy teaching than trying to get you to reach out to us and see if we can help you. But our number is 877-600-2487. That's 877-600-2487. If you give us a ring at 877-600-2487, we'll answer any questions you have. We'll give you a free consultation. We'll help you get your business credit report for free for 30 days to see what's on there. We'll review your credit profile with you. We'll talk about what your goals are. We'll help you get set up with your fundability. We'll help you with business credit. And we'll help you access all financing in one place. Why that matters? We see a lot of people that get denied for loans and credit lines only to think that there's no chance they can get approved, and we come in and get them approved all the time because they applied with one source of one kind of program, and we deal with over 1,000 sources and 50, 100 different kind of programs. So because we deal with so many programs and so many lenders, it gives you the best chance of getting approved for the most amount of money. You can also send us an email. If you're the quiet, reserved type that doesn't want to talk, then email us, info@creditsuite.com, or visit us